All right, guys, welcome back. So I was thinking about waiting till after the Fed reported to put out a video, but the thing is that I don't want to wait until I'm right and then put out a video after the fact. All right, I just don't think that's helpful for anyone, and so I'd like to cover the stock market, what I see right now, what I see going into the Fed. I'll try to get this video out before the Fed reports here in 30 minutes. And I just want to give everyone the look and have everyone understand how the market feels when even though the market's set up technically in a bearish posture. I want to get the video out right now to show you kind of how it feels potentially right before it rolls over. A lot of the time people will put out videos after it rolls over, after big sell-offs, and say, look, I told you, bearish. And the reality is, to make money selling a bear market rally or shorting a bear market rally, if this is a bear market rally, no one ever knows, of course, and I could be wrong, but I want everyone to understand how it feels, potentially right before it rolls over. So if it rolls over and we get the next leg down, everyone can go back and watch this video, look at the charts, and understand how the market feels. This is how it feels in a bear market rally. Doesn't mean that this is a bear market rally, but if it is, this is how it feels. Everything feels bullish, because the thing is that they don't make it easy. Bear market rallies don't come out of bad news. They come out of extreme bullishness, everyone thinking that the bottom's in, that it's a V bottom, and then you get the bear market rally. So just keep that in mind. I'm not saying I'm right, because obviously I'm questioning my position as well. And I think that's okay. It's okay to understand that, when trading, you should never feel 100% right. You should always feel that, okay, you have probabilities in your favor, but you're not sure. And that's ultimately just the reality of trading. You should never be sure. You should always be hesitant. However, you have to take positions. So, if you're short the market right now and you're questioning your position, that's okay. I mean, I think anybody would question their position on the price action that we've seen, but if you don't want to be short, then you should be long, right? I mean, one side or the other is going to make money. So you're either right or you're wrong. And if you're wrong, then you should flip long. But if you don't feel comfortable being long this market, then why do you want to cover your short or get out of your short? That's all I'm saying. Because the market's either going to go up or down. So if you should either be long or short. But if you don't feel comfortable being long because of the rally, then take a step back and understand that this is just human emotion. All right. And this is what these rallies are meant to do. They're meant to scare you out of your short positions so that they can take short positions before the next leg down. Doesn't mean that that's going to happen, but I'm just saying that's how these things are designed. So let's get into the charts here now that I've given you kind of my prep talk. And the thing is I've been trading long enough to understand how emotions play into these things. So for me, it doesn't really affect me. It just, I don't get shaken out of short positions that easily. I have to see evidence. I need a lot of evidence. Price action is not enough evidence. I need to see some other evidence. Yes, price action is the truth, and that starts to make you question, but I need to see other signs and other indicators to show me that I'm wrong before I just get spooked out on kind of an impulsive move up. All right, so Fed's reporting here in 30 minutes. Apple after the bell. Microsoft's coming up, or maybe Microsoft after the bell. I don't remember which one, but one of the big fangs. It's either Apple or Microsoft after the bell, and then another one tomorrow. And so to see a big move happening before such big market moving reports, it's just I can't trust that move. All right, so I have to ride whatever short position out. I have to ride it out past the Fed, past the big fang reports, and then let the dust settle and evaluate where we're at. So that's probably going to take place next week or Friday, trying to evaluate kind of where the market wants to go after it knows all the information. Where does it go? I think it still goes down. I think this move is a shakeout move. Let's get into these charts. All right, futures. So yesterday, gap down and just a little. Well, yesterday we sold off just a little bit, but this morning, today's price action has been nothing but bullish. We've just been ramping higher, holding this downtrend line here. So looks like they want to pop this range right here of 89.59. Looks like they want to pop it to the upside, and that's a big level right there. You can see it goes all the way back there. So a pop above this level, maybe an initial pop higher on the Fed, followed by a reversal candle. That would give you kind of a reversal in the futures. Let's look at the Qs. All right, look what they did to the shorts and the Qs. And this is why I didn't really trust this breakdown. Yes, it was a breakdown, but I said, look, it's not that impulsive. And, I wasn't expecting, that. The thing is that there was a breakdown, but it's still the same concept was in play. Fed and big market moving, reports coming. The market's not going to just break down potentially and just sell off into bear market before that. After, yes, it could easily do that. But before that, it's just questionable. So they gapped it higher, held right back in support, have been moving it higher ever since. And that's just the price action. So as of right now, bullish. But this is how I just want you to understand. Everything, when something turns in a bear market, it always feels bullish right before it turns. So they're not going to just, give you a sign that says, they're not going to just sell off like this. They're not going to just limp through, kind of give you an opportunity. Oh, okay, that's the end of the bear market rally. Time to get out of my position. That's not how it happens. The way it happens is they ramp it up. Everything feels bullish. You don't know that you should be getting out at that time because you're like, everything's great. I'm making money. No problems here. And then all of a sudden they just gap it down or just crush it like really quickly. And that's how sell-offs happen. They happen quickly. It'll look something like this where, okay, selling off a little, but at this point, doesn't really feel like, it's just a pullback. It's a buying opportunity because if you look here, every single pullback in this rally here was a buying opportunity, buying opportunity, buying opportunity. Everything was buy the dip. Here it is again. Look at that. Gap down, buying opportunity. And okay, so that's exactly what it looked like here. Boom, gap down. And that's how they trap the money. So they're going to probably do the exact same thing with this bear market rally. If this is a bear market rally, again, I have to question it because the price action is making me question it, but I still need to hold strong with my thesis until I see some more proof. And they can't shake, they're not going to shake me out that quickly and that easily. So again, I'm not adding to my positions. That's the point. I'm questioning them, my shorts. I'm not adding to them, but I am, I'm not being shooken out, yet. So I think that's something that traders need to understand as well, is a lot of new traders that when they start going in the hole, they'll start adding to their positions. I don't add to my losing positions when they go against me. And I will hold them and I will stop out if after these reports and everything seems still bullish and the market's still constructive, okay, then I can stop out, take a loss. But without adding to the position. That's the thing. I'll add if this, if I get that reversal candle, we start to see the sign of the end of the bear market rally, then I can add. But for now, we'll just hold tough. And then the SPY's just, ramping within this upward price channel. So you've got the highs right here, 218.50. All right. And they could pop that just briefly and then sell off. Everybody's eyeing this gap right here. There's this big old gap. You got the gap fill at 223.34, and you've got gap entry at 223, and you've got gap fill at 229, 230-ish. Everybody's eyeballing that, and all the bulls see that gap right now. They think, okay, we're going to fill that gap. That's maybe the end. That's the target that everybody sees. If this is a bear market rally, then I don't think that we get that opportunity. I think what we do is potentially pop the 218, level here, somewhere right here. We pop it, maybe today, maybe at the open tomorrow, and then that's potentially the end. So we need to see signs that that's true, but when everybody's eyeballing a level, I just don't think they're going to give that level. I think they're going to make it seem like they're going to get that level, and then and then roll over. So that's what I think. But again, questioning, keeping the hesitation there. This is trading. You feel uncomfortable when trading, and oftentimes when you're right, you don't know that you're right. It feels wrong. You feel, oh, I must be wrong. And oftentimes you're right, and that's just how trading works. SPY, we broke down from this rising channel here in SPY. It was a bearish rising wedge. We broke down. We've just been back testing. So a kickback pop to fully back test could be in play, or we roll over here. I don't know. XLV, this one still looks good. The short still looks good here. So we broke down from this bearish rising wedge. We've just been chopping sideways, broke a little bit, and nice impulsive sell-off candle. And all we've been doing is kind of back testing a little bit. Resistance has been holding, and so still looks good. And I think that resistance is going to continue to hold, and we start to roll over. Microsoft's not doing anything. It's still set up in a bearish posture, although earnings come out. So when earnings come out, that's going to change. Something's going to happen here, but it's still set up in a bearish posture. Bearish rising wedge, broke the wedge. We've just been back testing. So what do? Do they pop it on the earnings to a new high right here above 170 or 180, and then it sells off? Or does it just sell off here? I don't know. It's set up to sell off. Whether they pop it and sell off or it just sells off, I don't know. If I had to put money on it, I'm not playing Microsoft. I'm not betting, shorting Microsoft. But if I had to put money on it and had to take a position, I would say that they're going to gap it down. Apple. All right, look what Apple's doing. All right, we broke down, same kind of situation. They break down, but before Apple earnings. So this can't be trusted. When you see this, you're like, okay, Apple did sell off, but earnings hasn't come out. So what are they going to do? Before earnings, are they going to just crush it? Well, they might sell it off a little, but they're not going to crush it before earnings. Everyone wants to see what Apple is going to report. I think they're going to have negative earnings. I think they're going to have bad earnings. And I think, well, everybody thinks they're going to have bad earnings. Right now, the market's like playing it like, oh, not as bad as we thought, even though absolutely horrible. That's just the attitude the market's taking right now. That's what you get when you're in kind of a bullish thing, is they just disregard bad stuff. Doesn't mean that the bad stuff, that just this might be the end of the rally, and then the bad stuff continues and we sell off and, bad becomes worse. Who knows? But look at the black line right here. This is your long-term bull market in Apple. All right, going back to the weekly. All right. I'm going to have to wrap the video up here quickly if I'm going to get it out here before 11. But going back to 2009, here's your bull market in Apple. Look, all we're doing is just running right into that. So there it is, black line right there. So we just popped above it briefly, spiked it, selling off. That resistance is holding. So what happens now? Does that hold as firm resistance and we roll over? That's what I think is going to happen. I think they're going to gap this thing down with bad earnings and set the stage for, the sell-off. But could be wrong, of course. All right, Walmart, look at that. So I shorted this thing. I shorted it yesterday because I saw this thing putting in this breakdown pattern. You get this kind of triangle pattern like this. These usually resolve to the downside. The way you build them is you have kind of the downward sloping trend line on the top and then just a flat trend line here on the bottom. So when you see this setup, these typically resolve to the downside. They break down, and that's what we got. And it was impulsive too, with a gap down. So to me, that looks like a false breakout. Look at the daily. Look, rolling out. Here's your bearish rising wedge. Nice big long bearish rising wedge in Walmart that I've called out in the previous video. And we broke to the upside of a bearish rising wedge, but it looks like it's a false breakout. So I think the Fed might do the damage today actually and tank this thing and bring it down lower within this bearish rising wedge. And that's very bearish because that's a false breakout with a gap down, sell off, brings you down to the wedge. That would put all the way down here in play. So I decided to short this again on that pattern that I saw up here because I was short before, but then I didn't like the price action that I was seeing when it was gapping higher. So I got out of it, but I got back into it right here yesterday, gap down, and we're just kind of trading right around this support. The Fed comes out here in the next 10 minutes, so we'll see. Looks bearish to me. SOSX, I'm short this one. This one is just continuing in the bearish rising wedge. So still bullish. Still bearish in the medium term because it is a bearish rising wedge pattern. Although short term it's bullish because it's just making its way up within that wedge pattern. But these patterns typically break down and resolve to the downside. So that's all I have to say on that one. Tesla. I'm short this one. Barely profitable on this. I got short up in here. It looks like we're just barely profitable, but I know Tesla earnings are coming out after the bell, so I don't know. Anyone who's short this could probably just wait till after earnings and see what happens. I don't have a huge position on this, so I'm okay with holding it into earnings, even though I could be wrong, or they could pop it. Right now it looks bullish, but again, earnings has the potential to just completely foil that. So if the earnings come out bearish, which I think they will, that's why I'm going to stay short. Then 650 I think is where it'll open up tomorrow, somewhere down around there, and I'll probably cover on that. Guys, and then what else do we got? We got gold. Let me bring and really just Barrett Gold is the only one. But look, we broke down from this upward channel. We're starting to break down, kind of trade sideways. I don't know. I'm not in this. I don't own it. Again, I sold this, down here. I sold this up around 28.40. I bought it back right here at trendline support. Sold it, sold into that little pop, made a little bit of money there, and then it started to just kind of chop out, lose momentum, and we've been losing more momentum. So it could easily back test all the way up to 28.40 again, but it's set up in a bearish posture because we broke out of this upward channel and we've lost momentum. So I'm looking to buy it back around this 22.50 if it wants to head south. All right, guys, I'll get the video out. Good luck. Fed comes out here in like 10 minutes, so